All right, welcome everyone. Welcome to another Market Trap. I have with me Mr. Pankaj Pandey, and this is almost the final week, final few days, end game of 2024. Uh, बहुत सारा onslaught हमने देखा, bloodshed देखा market में in the last few weeks, and then finally this week was interesting to say because हर दिन market ऊपर खुलता था and then it ended somewhere flat or downwards. So, what's the outlook from here on, sir?
So hi, good evening, Vishu. So I think this is one of the few weeks where nothing happened in the market. So it was a truncated week, and we have seen volumes at closer to 1 month lows. I think what market is looking to do is that looking at some bit of a support, given the fact that we are in a oversold condition. But unless market or Nifty does not close about 23,900, we would not expect a recovery in the market to 24,400 kind of levels. So it is probably going to remain in a consolidation mode, say 23,900 to 23,200. And I think January is again going to be a month where you are going to see good amount of volatility because one, you will have new policy measures, especially Trump is going to take charge. Then we will see the beginning of the result season. So that will again cause stock specific volatility. And then budget is also not far off. So budget expectations also will start coming into the markets. But sectorally, I think BFSI, IT, pharma looks better at this point in time. And capital goods and PSU is a place where I think new bargain buying can happen because we've seen decent amount of correction there.
Absolutely. Sir, one of the highlights of past quarter or past few weeks has been the FIIs versus DIIs fight. At one point where I think we used to call bulls versus bears, market का FII versus DII का एक angle नया emerge हो रहा है. So, what's your view on it? What has been happening in this domestic investors versus foreign institutional investors scenario?
So I think one thing which is clearly standing out is that this is 1 year we are going to see a record inflows in the primary market. So primary markets, the FIs have poured in about 1.2 lakh crores because this year is going to be the one of the biggest fundraise which we have seen through IPOs, QIPs, and OFS. And while they are putting money in the primary market, they've sold equivalent amount of 1.2 lakh crore in the secondary market. Now, so from that perspective, the secondary market or the Nifty hasn't done much, and which is why if you look at Nifty has lost more than half of the gain, so it's up about 10 odd percent. And I think what you are also seeing is the complexion also sort of changing. The domestic participants have done very well. We all know that the SIP number is consistent at about 25,000 odd crores. So overall, domestic flows have been pretty robust at 4 lakh crores, and which is what is keeping the markets afloat, especially the broader markets. Now, what we are also seeing is that one interesting thing is that while the FIs are sort of selling in the secondary market, so the sectors which are bearing the maximum brunt is the banking and financial services, and the other sector is oil and gas. So if you look at in an index like say NSE 100, 32.5 is the kind of weightage BFSI carries, and oil and gas carries about 10% kind of a weightage. Together, these two sectors have seen an outflow of nearly 1 lakh crores. And where is the money sort of going in? The money is going into new age or new sectors like say capital goods, healthcare, telecom. So I think FI preference is definitely changing. One, they are moving more into primary markets given the opportunities which are available. The other is they are moving within sectors. So traditional sectors like BFSI and oil and gas are losing out. And whereas capital goods, healthcare, or telecom are definitely finding attention of the FIs.
Absolutely. I think one of the most notable highlights of this past week was the 55th GST Council meet. So what are our key takeaways there?
So I think a lot was anticipated, Vishu, from this GST Council, but nothing happened. So nothing major came out. So one was obviously the biggest expectation was the GST cut on insurance. Now, within insurance, if you look at the life insurance companies, they derive 8 to 12% of their revenues of business from these term policies where the expectation was that the GST rate would be cut. And then the biggest beneficiary would have been the healthcare insurance providers. But I think the GST Council is waiting for further inputs from IRDAI, and that is when they'll take a call. And I think one more thing which came out was the GST rates have gone up on the used cars from 12 to 18 odd percent. Now, while media attention has been a lot on this, but our sense is that this is again a sort of a non-event for the industry or for the segment. One, it does not apply to individual. The other is this is largely meant for car dealers. So if you're buying a car at say 10 lakh rupees and selling at 12 lakh rupees, the GST incidence for them has gone up. So from that perspective, I think the overall impact is about 1% of the overall selling price. So from that perspective, while it has definitely grabbed a lot of media attention, but I think from an industry perspective, it does not really move the needle much.
Right. Let's talk about microfinance sector. I think it has been facing a lot of challenges lately. Could you help us understand exactly what is going on?
I think when you look at in the BFSI space, even the latest RBI report is highlighting towards the unsecured segment of the market, and or the sense what we are getting is that you will see further tightening of regulations in say whether it is a home, whether it is a gold loan business or a microfinance business. Now coming to microfinance business, so this segment has grown very well in the last 3 years. And it has got a gross loan portfolio of about shade over 4 lakh crores. And this is a good segment for the banks because typically the yield on advances there is a 20 to say 24 odd percent. So banks which were sort of grappling with pressure on margins, this was a good segment to sort of to be into. But sadly, what we have seen is that there have been number of challenges in this segment. While there are factors like heat wave, we had elections, and then there has been aggressive lending done by financiers, and that has led to overexposure. So you have customers who have got 4+ kind of loans, and there are repayment challenges also because see last year the collections were 98%. This year or second half Q2 the collections were 94%. And I think if I have to highlight one example, IndusInd Bank is a classic example. Now, this bank, the overall microfinance exposure is at about 9.2% of their advances. And we've seen this stock taking a massive hit of, say, 38% on a YTD basis. Last 3 months, it's down about 30%. And what you see in terms of news flow is that they're looking to sell microfinance loan portfolio worth about, say, 1573 odd crores at 85 crores, which is 5% the kind of recovery. Now, the thing is that RBI will keep tightening the norms, and on the specific MFI as a sector, I think segment, our sense is that growth is definitely not going to be there for the next 2-3 quarters. And I think possibly for in the second half also, we may not really see much of a recovery. I think the recovery will happen only after, say, 2 or 3 quarters. So till that time, I think this is one segment, one where one should remain cautious.
Right. Sir, I think UltraTech and Star Cement ki bhi news आई है, which we did discuss a few week backs only itself. But now that it has come to fruition, so what are our takeaways here?
So in cement, Vishu, if you look at, this is one of the worst year for them. But in terms of news flow, you're seeing the maximum news flow. So what has now come out is that the UltraTech has picked up closer to 8.5% or a shade over 8.5% in a Star Cement, which is a Northeast-based player and having a market share of about 24%. And they are expanding their capacity from 7.7 million ton to 11.7 million ton. Now, the M&A in cement sort of continues to be on a very high pitch. And I think what we are seeing of late is a bit of an improvement, especially on the demand side. So we are seeing November and December 10% up in terms of demand, because first half there was absolutely 0% growth in demand. So there is a good chance that we might end up at 4 to 5% kind of a volume growth. And what is clearly happening in this M&A is that most of your bigger players, which have got better balance sheets, are taking over smaller players. And I think Star Cement, while it's a financial investment, but when you look at the valuation, I mean, the valuation at which they bought this 8.6% stake is at about $110 EV per ton. Whereas when you're putting up a fresh capacity, that is costing about $120 EV per ton. So most of your smaller players are quoting below replacement cost, and your bigger players, the likes of UltraTech and others, they are quoting at EV per ton of 150 to 200. So I think things are going to improve in the cement. The numbers have yet not been supportive, but I think this is one segment which can do very well. And yes, news flow wise, you are seeing a lot of M&A. I mean, both the big boys have been looking or on a sort of a buying spree across companies. So I think this is one sector which is gearing up for interesting times.
Absolutely. While cement seems to be seeing a lot of mergers, we have SKF India, which has announced that it will demerge into industrial and automotive sectors. So how do we look at it now?
So our sense is that this is a fairly interesting thing or interesting development. So as a part of demerger, SKF India, the listed entity will remain in the business of auto, whereas we'll have a new subsidiary, SKF India Industrial, which will get listed, and existing shareholders will get one share of that. And industrial is a bigger segment because of the overall revenues, say for FY24, industrial contributed 63%. We're liking the industrial segment more, largely because when you look at wherever there is a demand for higher load, especially in segments like, say, railways, heavy industries, or metals, bearings are required. And I think SKF industrial segment or industrial business will witness better growth rate and also better multiples. So that is where the value unlocking will happen. And I think overall, with more localization, it is possible that the margin profile also could get better. So this is one of the few companies which are part of our capex portfolio as well, and we have a target price of 6060 on the stock.
Right. We also had another news of JSW Group securing 2 mines from Hindustan Copper, which is a new. They are pouring into a new segment altogether now with that. So how do we look at that?
I think JSW Group has been very ambitious. So largely they are known for their ferrous as a segment. In fact, they are a bigger player domestically than Tata Steel now. And I think with their bagging of copper mines or their acquisition of copper mines, so what will happen is that they are going to develop these mines and share some portion of the revenue with Hindustan Copper. And since the overall capacity is expected to be 3 million tons, in copper, the recovery is only 1% odd. So I think from a revenue potential perspective, this segment could have a revenue of about 2,500 odd crores per year for JSW Group. Now, why is this being done? If you sort of connect the dots, JSW Group has been pretty active on the auto side, especially on the EV side. So while they already have tie-up there, and then they are also looking to sort of witness into battery manufacturing. Now, copper is something which is very core to all these segments, and it is expected that the copper demand in India will grow from, say, 1 million or will go up from 1 million ton to 2 million tons in the next 7-8 odd years, and which is why I think this group has been sort of pouring into this. In this group, we like the JSW Steel. This is one company which we had given as a Shubh Nivesh also on the perspective that government will come up with some anti-dumping duty measures, and we feel that this is one company which has been doing very well within the ferrous as a segment. So here our target price is 1130.
Right. And finally, the final and main segment of the day, hidden gem of the week. Which will it be this time?
So this time we are going slightly offbeat because markets also have not really been very what should I say, more of a range bound. So what I'm recommending is Protein, e-governance or technologies, private technologies with a target price of 2510. Now this company was earlier known as NSDL e-governance. And this company has got 3 main verticals. So one is the tax services. So they are the biggest issuers of PAN card. So in India, you have about 75 crore PAN cards, and this company issues about 5 crore of new cards every year out of the total cards which are issued of say 7 to 8 odd crores. And per card, they make about 100 crores, 100 rupees of revenue. Now, the other is that they are also the record keeping agency for NPS. And we all know that NPS is going to be one of the major pension services offering for the government. And I think private sector participation is low, but our sense is that will go up. The other is with more of business being done online, obviously the online verification through PAN card or through Aadhaar or authentication is going to increase. In fact, last 4 years, the PAN verification has grown by 52 odd percent. Aadhaar authentication has grown by about 38 odd percent. So we are quite confident that this segment can grow at say 20-25%. And on top of it, this company has also got exposure towards ONDC. Basically, it's a public market infrastructure, and where they connect all the buyers and sellers. So what if the transaction there goes up, this company will have a role to play and will have some share of revenues coming in from there. So I think all in all, this is one company which has got a smaller market cap of about 8,000 odd crores. Its cash rate has got a cash of about 700 odd crores. Top line growth could be 11-12 odd percent, but we expect bottom line growth to be a lot more higher because they've done the bulk of the capex. So from that perspective, I think this is one of the few stocks which we feel on the digital public infrastructure is a good play with a target price of 2510.
Right, brilliant, sir. We had received a question last week in the comments from Mr. Kanan Ramanathan that is it the right time to invest in a rising capex portfolio as of this moment? So what do you think about that, sir?
Well, yes, because capex as a theme still gives us a large opportunity across the next 3 to 5 years, probably longer. And we see a lot of value and scope for good companies here. And in fact, I think capex has been the biggest theme which we feel will do well. And I think we have segments like railway, infra, power, where this portfolio is present. And to sort of name the stocks, you look at Thermax, we have cements there, we have cement companies like JK Cement, UltraTech Cement, which we talked today, or we have something like say NTPC. We've got financials like say IRDA or SBI, or we have got even a bearing company like SKF, which we discussed. So I think all these stocks are part of that portfolio, and we feel that capex is going to be, or this capex theme will remain one of the strongest themes to play for the next 3 to 5 years at least.
Absolutely. Well, this was a wrap for this week. Thank you so much, Pankaj sir, for sharing your experience and expertise with us. And also, this is not a wrap for just this week, I guess, for this year, because we'll be seeing you in 2025 now. So here's a big happy new year wish to all of our viewers. If you have any questions for Pankaj sir, please put them down. Till then, happy new year.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.